Hello, everyone. Thank you for joining us for our webinar today, titled Why Credit Unions Should Consider Joining a Merger Network. This is a topic that we've been talking to a lot of credit unions about, so appreciate you taking the time to join us today for this important discussion. We've got some materials prepared, but we have room for Q&A at the end. And just to walk through a couple of logistics, we always send out the recording after our webinar. So later on this week, you'll be able to have that in your inbox if you registered. Just make sure that you go back and register if you didn't receive that, or if you didn't sign up directly. That way you make sure that you have that. We also will send out the slides as well, so you don't need to scramble to take notes. And then we just ask that if you have questions throughout the webinar, you're welcome to note them down, include them in the chat, and we'll make sure to adjust them as we go along, because sometimes we know waiting for the Q&A may not be as fruitful as discussing some of this along the way. So in terms of our agenda today, we'll start with introductions, introducing to those who will be leading this discussion, the merger activity landscape, and then we'll be discussing benefits of the merger network. And of course, like we said, we're leaving room for Q&A as well. My name's Phyllis Lee. I'm the CMO here at CUCollaborate. We are a data and analytics CUSO, and we really are helping credit unions maximize growth and impact through our products and services. You'll see that we have some that are grounded in software, we have some that are tech-enabled, but all of them are grounded in data insights with the team that we have and the technology that we're powered by. In terms of our areas of expertise, we are reaching more members through field of membership expansions, charter conversions, and branch strategies. We're serving underserved communities through LID, the low income designation, and CDFI certification initiatives. And then, as I mentioned, we have growth strategies through member demographics and analytics, and are supporting merger partnerships that make sense and helping clients with member acquisition as well. So the areas of expertise, to sum up in a nutshell, include growth strategy, field of membership and charter work, low-income designation, CDFI work, branching strategy, merger strategy, marketing and branding, and digital acquisition. I'll be handing you over to our merger network leaders in just a second. We have Kevin McBreen, and he's the advisory director, and Louis Dopico, who's our chief economist and runs our data science team as well. These two gentlemen will be walking you through the content today. Again, if you have any questions, feel free to put them in the chat. I will also add a meeting link as well. So if you have a question that's a little more complex, a little bit more individualized to your credit union, feel free to book time with Kevin with that meeting link, and you can continue the conversation one-on-one as well.
Okay, thanks, Phyllis. Kevin McBreen here. I joined CUCollaborate in early August to head up the merger advisory business, which also includes the merger network, which was launched in July. I started my merger advisor journey 27 years ago. I was an investment banker for 17 years, mainly at JP Morgan and KBW, and was an internal M&A advisor for the past decade. This was all focused on financial institutions, but also the main focus I had was on deposit-taking institutions. So credit unions, thrifts, and banks. With that, I'll hand it over to Luis.
Hello, my name is Luis Dopico. I'm the chief economist here at CUCollaborate. I've been working in the credit union space for over 20 years. I've been researching all kinds of credit union data, research failures, factors that affect growth. I've been working on merger data for some 15 years or so, and we're very excited to be launching and developing our merger network, because we believe that we really have something to offer in terms of helping acquirees in mergers better select which partners might be best for their members.
So just some observations on merger activity over the last 4 or 5 years. The pandemic slowed mergers for a little bit, but it greatly accelerated the shift to digital banking. And what that is now is creates a challenge for smaller credit unions in providing those broad services increasing cost of tech and regulation burdens, which is really driving the need for scale across the industry. Many also face succession issues as long tenures, CEOs start to retire. We'll see on the next slide, but while most transactions remain below 100 million in assets merged in, the merger of equal trend is very apparent. There's been 9 deals in the last 4.5, 5 years to achieve scale, and that was to get to at least $1 billion in assets. The next slide we'll go through is actually the merger activity by year, which remains robust. Just a little bit of an update. As you can kind of see here, the merger rate remains pretty steady at 3% per year. Assets merged in quadrupled in the last 10 years, from just under 25 million to almost 100 million. In terms of updating this for the third quarter, they just put out that there was 49 approvals in the third quarter. So that's 121 approvals. The average deal size in terms of the assets merged in was about the same. So the pace for this year is about 165 to about 170 transactions. In terms of the next slide we have is that really, a lot of the transactions that happen in terms of mergers are scale driven. There's also margin pressures that are the big drivers. The drive to being above $1 billion in assets is real. Some people would argue 800 million to about $1 billion is kind of when you start seeing the efficiencies in terms of scale. Also, competition is a key driver, efficiency. And I would say that probably 25 to 30% of deals are starting to be driven by succession issues. So the next slide, why did we create the merger network? It's really due to criticism of private insider deal making of credit union mergers versus the focus being on the member benefit. So we added, created the merger network, like I said, started in July this year. It's really a standardized competitive process that is really fully transparent. The network is also a very complementary approach to your own outreach to merger partners. And it could also be viewed as kind of a softer approach in terms of finding a strategic partner, if you're looking to merge into somebody, or being the pro forma surviving institution. The next slide will go through what I think is really the keystone of the network, as half the work is how to show it would be better for the merged in members. We leverage Aries data provided to dollarize the benefit to the merged in members as if they had been part of that pro forma credit union day one. This takes into account all credit metrics by product that are utilized to have an apples to apples comparison. As we can see in the graph here, you can see the FICO stratifications. And this is something that can be critical in terms of the decision-making process of who would be the best fit for the merged in credit union. The next slide, I'll go through our process and how it works. When people join the network, we ask them to really tell us, do they want to be the pro forma strategic partner kind of going forward? Are they looking at mergers of equals also? Or are they looking to be merged in to a larger credit union and not be the surviving credit union? So the first steps are, we do an introduction call on what the merger network is, similar to what we're doing today. There's a membership agreement for the ones that are going to be the strategic partners. Then we collect survey responses in terms of what's the ideal situation or merged in credit union that they're looking for. We get their Aries file also, and then we use the survey to identify what's the possible field of candidates that could be potentially people looking to be merged in. For the people that opt into us and tell us they want to find a strategic partner, it's really the same process. The survey, the Aries file, but we provide to them the member benefit analysis. And then the board would select strategic partners on that basis, and an NDA and disclosure of who is looking to be merged in would happen at that point. So everyone's anonymous until that point where we get to go ahead from the board and we, we reach out to the potential strategic partners, and we try to make sure that, the matchmaking process goes well. In terms of just in terms of summarizing, the whole reason to have the merger network on the next slide, I'll go through it. It's really the overall goal of the merger network is have a broader approach that's focused on the member benefit and it also could be a situation that leads to transactions you might not have seen in terms of your personal network and who in terms of who might be available. It's an opt-in process. Everyone self-identifies in terms of what their intent is. I think there's people that would say, I want to be the strategic partner at this point, could change in a couple of years, where they might be looking to a merger of equals or potentially themselves merging into somebody. But the big thing is also it's confidential. It's an anonymous process that is structured to really create a level playing field. Once again, trying to avoid the criticism that has surrounded some mergers that have happened. The other thing is, if you're looking to be merged in and find a partner, it's free. There's no cost for those who are looking to be merged in. And we provide that member benefit analysis in terms of how it would be better for your members going forward. If you're going to be a strategic partner going forward, though, the person, in terms of control of the board, they're the payers in the system. We do have introductory pricing available till year end. So if you are interested in joining the network, contact your account executive, and they can get to maybe another call with us or get you a copy of the membership agreement. Phyllis, I'll hand it back and see if or Luis, if there's any additional comments you want to make, and we'll go to the Q&A.
I think we can proceed to Q&A.
Well, I was going to say, we did receive a question in the chat, and that is it mandatory to upload your Aries data in order to be a part of the network?
Well, the Aries file is critical for the member benefit analysis. And there's certain fields in the Aries file that are critical to that. If there's concern around, personal information, would work with you in terms of what would have to be provided in terms of the Aries file.
Yeah, and I would say that it is not mandatory to give us an Aries file to join the merger network. As you proceed, when a partner may want to compare their pricing against yours, at that point, to get the full benefits of the merger network, you would have to share an Aries file. And if you share an Aries file early on, your data will be compared against more potential candidates, so you will get more out of the network if you give your Aries file earlier on, but you can delay it somewhat.
We have a couple of questions here. Number one, regarding the network to date. So have any credit unions joined the network yet, or is this the initial launch?
The initial launch was in July. In terms of people that have signed a membership agreement, we're at 21 currently. That is dispersed across the United States, so coast to coast. I probably have 2 or 3 calls a day that are introducing people to the network and the concept. In terms of, I think by the end of the year, we'll probably have 30 membership agreements signed. And I have, there's 5 institutions that have identified themselves as looking for a merger partner. So those that are looking to be merged in. We actually just went through a process with one of those. That was a sizable institution in the Northeast. We presented the member benefit analysis to them, and they are moving forward. And hopefully that transaction will get announced I doubt before the holidays, but hopefully in early January.
And then we have another question here. How much strategic capital or what approach to determining the amount of strategic capital should an acquiring credit union reserve, anticipating a future merger opportunity?
Well, that's a case-by-case situation. It depends on the size differential. You want to keep a strong net worth ratio. The marks on the merged in institution would drive the pro forma capital ratio. So you have to know the fair value marks. But you want to still keep a strong capital ratio going forward.
I think that's all the questions we have so far. We can give people another minute. Luis, is there anything else that you would add to the discussion so far?
No, I think we just say that we are very excited to launch the network. Kevin and I have had by now dozens of conversations with the credit unions that have already joined. We have had very positive responses as we develop the network. The way that we are building things is we are trying to first cast a wide net so that we look at potentially hundreds of credit unions that might be partners for you. Out of those hundreds of credit unions, obviously not all of them are going to be ideal candidates, but we first want to ensure that we're not leaving anyone out as a potential candidate. We apply data science techniques to figure out which credit unions might be most interested to join, and we take into account the surveys filled out by individual parties that are trying to join to try to figure out who do you want to join, merge with the most. You combine the two, and then that allows us to do outreach to other credit unions to see if they want to join the network. And eventually, like in the one case that Kevin mentioned, we had a credit union looking for a partner, and we did analysis for how well off their members would be if they merged into credit union A, into credit union B, into credit union C, and we had total dollar amounts. If you go with this credit union, your members will be better off by so many dollars. They could compare against credit union B, they could compare against credit union C. We broke down those amounts across types of borrowers, across types of depositors. People that have a mortgage, this is how much they could be better off by. People that have an auto loan, this is how much they could be better off by, et cetera, et cetera. And thus far, we are getting a lot of positive feedback from the parties that have joined the network already.
We do have a couple new questions that have popped in. One comment I'll make to what Luis and Kevin, you were both just talking about is that another comment I've heard kind of from the market is that in a way we're doing like this discovery process and analytics up front versus like normally you would have to wait until you got to a due diligence process to learn about these things and perhaps not even in as quantified of a manner as we were discussing. But you certainly lose a lot of time and efficiency in that process. A couple of questions that I want to make sure I get to for folks here. If we were to partner with CUCollaborate for lid services, would we be able to use the same Aries file for this as well?
Yes.
Yeah.
Yes, we just need a recent Aries file. And ultimately, what the methodology involves is trying to figure out how good are your rates for this type of loan, auto loans, for this credit score range, say it's 670, 700. Credit Union A charges 8%. Credit Union B charges 8.5%. What's the difference? Multiply that times the number of dollars, add it up across all of your individual loan accounts and individual deposit accounts. And you might find that Credit Union A offers better rates than Credit Union B. You might want to consider merging with that one. And if you join the network, we can run that comparison on a preliminary basis against hundreds of credit unions. And that could guide your decision making. Instead of trying to make merger decisions blindly, you can make your merger decisions on a fact-based matter, saying this is how many dollars our members would be better off. Would you rather join a credit union that pays far better rates than yours, or one that actually may have rates that are worse than yours?
We have a question here. Would you be able to share a sample analysis with the group?
Of the member benefit analysis? Is that, I'm assuming that's what it is. We did have that graph on page 10. I don't know if you could back up to that, Phyllis, but this is essentially, you can see the benefit by credit score range. And I'm not sure, Luis, what else you want to add to it, because this is your work.
Yes. So basically, this is a simplification of the overall work, but at a high level, in the horizontal axis, you have different credit score ranges, and you can see the two lines that are sloping downwards are basically interest rates are lower for higher credit scores, but you see that there are two lines. So those are your rates versus someone else's. And you can see where your rates are higher or lower. In this example that we have used, one of the two credit unions has better rates for people with very low credit scores and also with very high credit scores. And the other credit union happens to have interest rates that are flipped for people with middle credit scores. You multiply those differences times the dollar amounts of loans, and you sum it up, and that tells you the big picture of what you need to know. The other thing that we do is interest rates are not everything. There is also approvals on loans. So we also look at the dollar amount of loans across credit score ranges. So it might be that one credit union is on paper offering great rates for people with low credit scores, but they never approve such loans, or they approve those loans at a very low rate. So that's something that in the actual work that we do, we take that into account. So we look at how good are your rates on paper versus what is the distribution of your loan portfolio across credit score ranges. So a credit union that has historically focused on people with weaker credit histories might want to take that into account. They may want to favor a partner that also has a similar history to ensure that after the merger, as likely would happen, the credit approval process will be that of the acquiring institution. So you want to find a credit union whose credit culture matches yours.
Any other questions from the group? Wait just another second, make sure none are coming in. Thank you everyone for joining today. As I give everyone just another 30 seconds to make sure that we captured everything anyone's thinking about, a reminder that we will send out the recording after this as well as the slides. You'll have both to reference. And again, we'll have a meeting link for Kevin in here as well. And I'm going to post it one more time in the chat as well, so that you have that handy as we're closing out today. If you have any sort of additional questions or want to discuss any circumstances around your specific credit union, of course, please feel free to use that to book time with Kevin as well. Thank you everyone for your time and attention today. Really appreciate you taking the time for this and appreciate all of the engagement and questions that we received. Happy to continue the conversation. So thank you again.
Thanks, everyone.
Thank you.
Thank you.